G'day folks, Jim here from Orchard Forex. It is Saturday the 12th of December and it's been a pretty choppy sideways end to the week for both the US dollar and the stocks as traders search for a direction really in the face of conflicting forces pulling the markets one way or the other. Brexit has obviously been front and centre of the FX market's immediate focus. We've yet to see the outcome of the negotiations, but we are told that the arguing's all going to be over one way or another by Sunday. The outcome doesn't look very positive at all. Boris Johnson's already told us to expect pretty much a no-deal Brexit. So Monday in Asia could be a pretty hairy ride for sterling, as well as the euro, depending on the outcome. So a pretty nimble stance is going to be required there. More generally, traders are going to focus on the possibility of any stimulus deal to kickstart the US economy coming out of the pandemic, while also waiting on headlines with regards to a vaccine to be implemented in the US in the near future. So it looks like it's going to be a pretty wild ride into Christmas as liquidity begins to thin out. Looking ahead this week to the calendar, we've got central bank meetings, monetary policy meetings to come from the Fed, the Bank of England, the Swiss National Bank and the Bank of Japan. So and there's going to be plenty of other points focused to keep us on our toes. So it's going to be a fairly active week, I think. We'll start off by just going to have a look at the trend table as usual. As you can see, things do look a little bit mixed, but the longer term charts for the US dollar pairs, the daily and weekly charts do suggest there's potential further upside in the euro. Dollar Swiss looks heavy. The Aussie looks very good actually. Sterling is mixed. It all depends on what happens on Sunday. The Kiwi also looks good, although that might be topping out in the near term, but longer term it still looks pretty good. Dollar yen I'd probably stay away from. We'll have a quick look at the longer term charts there. They're quite interesting, but not doing an awful lot by themselves. Dollar yen is not doing an awful lot at the moment. As far as the dollar index is concerned, quite interestingly, although the euro looks good on the longer term charts, the dollar index is actually showing us possibly a basing formation. It needs to hold support around here, but if that goes, then the dollar is heading lower. But that's not really being suggested by the dollar index at the moment, so we'll have a look at that in a minute. As far as the stock markets are concerned, I think we're going to see some more choppy sideways stuff while we wait on the news for the support package and also for any headlines regarding the vaccine. The precious metals look pretty neutral. I'd stay away there. Oil's not doing an awful lot at the moment, but it has broken above some serious resistance, and I do suspect that's probably going to grind higher. As far as the crosses go, probably stay away from them at the moment. Euro sterling is pushing higher as sterling weakens. Sterling Aussie is much lower, and that does look very heavy indeed. Elsewhere, I'll probably stay away from it. Aussie Kiwi may be going a bit higher, but that's about it. But elsewhere, I think I'll probably stay away from euro yen. Aussie yen actually is at new multi-year highs, so we're going to have a look at that in a minute as well. So moving forward to the euro. Okay, so here we have a 4-hour euro chart. The euro didn't actually make new trend highs last week. It's just chopping around either side of 121. The indicators pretty neutral on the 4-hour charts. The dailies, not really quite sure what to think here. It could be a bull flag that we eventually take out this peak here around 121.70, but we do have some bearish divergence on the daily charts, as you can see here. So overall, I suspect we probably are going to continue to chop around. My own preference would be to look to buy dips down towards this high here, which is around 120, I beg your pardon. And then again at this level here, these highs here at 119. If we go below there, I don't think I'd want to be long. I think that's probably a signal that we're going to see a stronger dollar, but I'm not sure that that's going to be the case. Because if we go forward and have a look at the weeklies, or even the monthlies actually, you can see that we've obviously broken long-term trend resistance going back down to what 2007. We're breaking out on the top side. We've taken out the 100-month moving average, and there doesn't seem to be an awful lot of resistance until we get to the 200-month and the 38.2 fever. So that's sort of 124.80, 126, something like that. So I do think there's good potential to head in that direction. The monthly indicators do look positive. So as I say, I'd rather be buying dips, but I'm not sure we're going to see an awful lot this week, while there's too many conflicting items pulling the dollar one way or the other. Although the euro could have a busy Monday, of course, with euro sterling in particular pushing and pulling it around depending on what the outcome of the Brexit talks are. So stay nimble, I think, in the short term, but longer term, as I say, I do prefer to buy the dips back towards this 120, 119 level, and I'd have a stop loss pretty tight underneath there though. Looking forward, dollar yen, I'm not really involved in dollar yen, but I'll just show you a monthly chart because it's been consolidating and it does look like it's coming to the apex of this. We're sitting on the 200 month and just above the 100 month moving average with this support here. The 100 month comes around 102.5. That's still some way off, and the top of this isn't up. This is way up here. It's a 108 or so. So I would continue to trade the range. I'd look to buy it on a move down towards sort of 102, 101, and probably look to sell it around 105 if we saw it. But as I say, I think there's better things to look at. If anything, the monthly charts are beginning to point very slightly lower, but nearer home, we're not seeing an awful lot. The 4 hours in neutral, we've got this really choppy, nasty sideways trade, so it's best not to be involved, I think. The daily's pretty much the same. They're not doing an awful lot. We've probably got some minor support and resistance at these levels here. But I think 102.5 on the base, probably 104, 105 on the top side, probably covers it until we actually do see some kind of outcome with regards to the stimulus talks in the States. Sterling, well, who knows? That turned sharply lower towards the end of last week, but we are sitting above this long-term support here. This is going back to when I say long-term support, this is going back to the beginning of the pandemic. And we've also got the blue line here is the 100-day moving average, which is providing some support at the moment. But if we do see a no-deal Brexit, I guess we just fall straight through the floor here, and there's no point really picking levels. But the 200-day moving average and the 38.2% fever do come in around sort of 127.5 by the looks of it. If we get an agreement, well, all things are on the other side of the coin. It doesn't look like that's going to happen, but I guess we revisit this sort of 135 area and possibly higher. It doesn't appear to be the way of it though. The dailies are pointing lower. The weeklies are not really telling us very much at all, and so I'd steer clear of sterling. Wait until it opens on Monday, see what happens. It's going to be a wild ride. It might be one for the day traders, but in the meantime, I think there are probably better things to trade. And we'll have a look at euro sterling in a minute, but we'll go and have a look at some of the other currencies first. The Aussie's been a particular star last week, and it reached 75.70. Now that's on the back of the iron ore price, which has gone pretty ballistic this year, given it was trading at $77 a ton in February, when beginning of February, when the coronavirus outbreak began. I think it touched $160 a ton on Friday, so that is supporting the Aussie. The indicators are beginning to look as though they're building up steam for further gains, to be quite honest. The weeklies, as you can see, we came up against this 76.4% retracement of this fall from here. But if we can take that out, then we've got, I need to close this up, and we can see that from the peak here of 2011, when it got up as high as 110.80, we're just coming back into the 38.2% retracement of that move down all the way to 57 cents. So this comes in at around, it'd be about 76 cents or so. And I think if we did get there, that's going to be very strong resistance indeed. but the weekly indicators are looking positive, and so I think there's a good chance eventually we can get there. A lot depends on risk sentiment, of course. If they fail to come to agreement over a stimulus package in the States, we might see the Aussie come off because risk sentiment turns lower. But for the time being, I prefer to buy the dips and look for a run to that 76 cents. In the shorter term, going back to the dailies here, I like to buy dips towards this previous high here. That's what's around 74 the figure. There's a bit of consolidation there. So say 74, figure 50, somewhere around there, looking to buy dips with a tight stop loss placed under 74, I think. The Kiwi looks somewhat similar. The uptrend is intact. The daily indicators might be running out of some steam, so we might need to see some consolidation. But the charts do look good for further gains. Although the weeklies do suggest that we're going to see some resistance here, so 71.40 if we get there. We're not so far away at the moment, but that should be some resistance. If we can break through that, then there's not an awful lot to sort of 74 cents and even 75, 60 where the next major FIBO is. But that's still a long way off at this stage, and I wouldn't get too excited. But having said that, the weeklies do look good, and the dailies, as I say, they're running a little bit flat, so we might see some consolidation. The 4-hour charts are chopping around a little bit at the moment. There's some support just below current levels. And if we got back down to around this sort of 70.50 level, I'd probably buy it, or maybe even leave it down to sort of 70.10, but with a stop loss placed pretty tight under the 23.6 level at 69.85. Now going forward to some of the more interesting crosses. This is a Euro Sterling weekly chart, and of course you can see that's made quite a solid break higher, and a no deal Brexit would probably see us retest this high up here. This is at sort of 95 and change, and could even take out that high. We have to wait and see on it. I'm not really going to try and second guess that, but it is going to remain highly volatile. The same kind of thing looks Sterling Aussie, I should say. Sterling Aussie had a major break to the downside, and it's closed below some quite important support here, the sort of 61.8% level. With the Aussie looking as strong as it does, I suspect we're probably heading lower for the time being on Sterling Aussie. And there doesn't, below current levels, there doesn't seem to be much support here. This low here, I suppose, that's sort of 171 and change, and then we've got the big FIBO level, but that's not sort of 168.5. But if anything, I'd probably be short sterling, long Aussie on the cross there. Once again, we have to wait and see what happens with Brexit. But as the Aussie looks very strong, coming back home towards the dailies, you can see that it broke down hard at the end of last week. The daily charts are pointing lower. The 4 hourlies are probably pretty oversold. Yes, they are. We've come down a long way, but I think on any bounce on Monday, Tuesday, I'd give Brexit time to settle down as far as the markets are concerned and sterling moves. But I'd be looking to probably sell into strength on the cross back towards sort of 176, 77. Certainly with a stop loss, I guess above 178 or so. The 100-day moving average here, that's not till 181. So I'd probably keep a stop loss if I was short around this sort of 178, 179 level, because I think there's a good chance we could go down and test these lows here at sort of 172 by the looks of it. So I'd rather be short across than long it. For the first time in a while, Aussie yen is looking quite interesting. It's come back to levels last seen in March 2019. So and it looks pretty good. Dollar yen, as I say, is not doing an awful lot, but the daily Aussie yen charts seem to be gathering some positive momentum. We've got some decent resistance ahead. We've got this kind of neckline here, but if that is indeed a head and shoulders, it might be easiest to see on the weekly charts. Let me blow that up a bit. If this is a bit of a head and shoulders, goodness me, we've got a long way to go from the base up to the neckline. If you replicate that, we're back up at mid-90s. Now that's a long way off, and we've got, as I say, some serious resistance ahead with the neckline and the 200-week moving average sitting right ahead of us. But if we take out, say, 80 the figure, then I think we could well be away to the races here. Not really quite sure what's going to drive the Aussie that much higher, while we see at the same time huge yen weakness. But it's just worth keeping an eye on. It's not something I trade generally. I prefer to stay away from Aussie yen. But the weekly indicators do point a bit higher. And as I say, the dailies also seem to be picking up a bit of steam. So that's it for the crosses. We're going to have a quick look at the stocks and the commodities. So here we have a daily chart of the S&P sitting just below all-time highs, just where just about 3,700 would it reached last week. The daily indicator is actually looking a little bit negative. Certainly we've got some bearish divergence in the RSIs. So I don't think we're going to make much headway on the top side this week, unless, of course, we get a positive outcome on the US stimulus talks. But the Republicans and the Democrats seem to be arguing with each other. And it doesn't look like we're going to make much progress at this point in time. So it wouldn't surprise me, in the absence of any progress, to just see some profit taking. We've come up a long way, really, since February. And as we head towards Christmas, liquidity is going to be thinning out, end of calendar year. And I wouldn't be surprised to see some profit taking, just driving the markets marginally lower. And perhaps we could even see a move back towards the 100-day moving average, which is at just under 35, but moving higher. And so that's given 36.60 at the moment. So that'd be 150, 160 points on the downside if we saw it. But overall, longer term, I still prefer to buy dips. Having said that, do note on the monthly charts, the MACDs are reaching very overbought conditions. Have yet to turn, but they're very overbought, while the RSIs are showing quite a degree of bearish divergence. So some caution is warranted, I think, on the top side as far as the S&P and the US stock markets are concerned. If we have a look at the local market, the Aussie market, that's come off 150 points off its highs. It got down to 65.80 or so on Friday. It did manage to bounce, but the 4-hour charts looking a little bit heavy at the beginning of the week. The dailies, likewise, just looking a little bit tired. So it wouldn't surprise me to see a little bit more of corrective activity to the downside, where the initial FIBO support is at sort of 65.30, followed by backup support from this FIBO here at 6,500 or so. That's from these lows and these lows here. So I think I'd probably rather be short than long. Just on Monday, Tuesday, I'd have a stop loss above this 67.40 level, and would be looking to sell into strength on Monday at around sort of 66 3/4, 66.80, something like that. And that's about that. Looking forward to gold and silver, which aren't doing a great deal at the moment. We'll just have a quick look at them though. They had that big sell-off last week, recovered, sitting around. It's just chopping around. This is a daily chart. As you can see, we had the sell-off, the recovery. Now we're not doing an awful lot. It could be that we've got a head and shoulders here with a neckline there. That might see another spurt to the downside, but the charts are pretty neutral here, to be honest. The dailies trying to recover, maybe. There is support here at the 200-day moving average. But the weekly indicators still, as they have been doing for the last month or so, looking very heavy indeed. Pretty much the same applies to silver. Here we have a weekly silver indicators looking very heavy. I think it's probably just going to remain very choppy, to be honest. I don't think I'd get too involved here. And the 4-hour charts, once again, maybe a head and shoulders here, but I suspect, if anything, we're probably just going to track sideways. If the US dollar does weaken dramatically, then silver should head higher. But as I said, I'm not quite sure that's going to happen in the next couple of sessions. Finally, we're going to have a quick look at oil. Now that's broken above this long-term resistance area that we've previously spoken about. And if we have a look at the weeklies, I think it can head higher, but we are running into resistance here. The 100-week oil West Texas moving average, that's sitting in just above here at sort of 48 3/4, and then we've got the 200-week at 52. $50 is obviously going to be a big level, but I think we are heading in that direction. The weeklies might be building some positive momentum. It's still very mild at the moment, but I do kind of like it, and having broken above this resistance, I would now have a stop loss, a solid stop loss at 43.5, but I am looking for a move towards that 48 3/4 to 50, and then possibly up towards sort of 50. Well, there we are with 51 3/4. That's the FIBO level that we're really looking at the moment. I do think eventually we can probably head towards 55, but I think that's for another time, and probably not till next year. So, but I'd rather be long than short, as I say, with stop loss at 43.5. Now, before we cut off, I'll just go and have a quick look at the calendar for the coming. Okay, so the Monday, the Brexit result is obviously going to be the big deal on Monday, but we have got the Japanese Tankan. But apart from that, there's some secondary Japanese data, but not a whole lot on the horizon. Come Tuesday, start off with the RBA minutes, Chinese retail sales, and the industrial production figures, UK unemployment, and that's probably about it until late in the day, when we get some secondary US data, but nothing really to worry about there. Wednesday we get Kiwi data, current account, the manufacturing and composite PMIs from Australia, inflation data from the UK, and then we get all the services and composite PMIs from Europe and the US. And then later in the day, the real deal, we start off with the retail sales, US retail sales for November, and that will be followed by the first central bank meeting of the week, which will be the Fed, and we have to wait and see what the outcome is there. We'll have a look nearer the time. Thursday begins with New Zealand Q3 GDP, Australian unemployment, and then we've got two central bank meetings, the Swiss National Bank and the Bank of England, along with European CPI, and some sort of secondary US data again, or yes, building permits, jobless claims, housing starts, and the Philly. Friday we've got the BOJ meeting, the UK retail sales, and the German IFO, but there's not an awful lot from the States on Friday, probably just as well, because it's going to be a pretty hectic week throughout as it is. So we'll leave it there for now, folks. Have a very good week's trading. I hope that's helped you a little bit, and we'll do another video next week. Cheers.